What's the deal with 2026 premium tax credits? Hi, it's financial planner Sean Mullaney. Let's discuss. So, folks are starting to worry about ACA medical insurance premium tax credits in the year 2026. And part of the reason is there is scheduled to be a change to those tax credits. And part of the reason is, unfortunately, there's a lot of misinformation and false information circulating about that change. That change is not an elimination of those credits. Those credits are not going away. Far from it. However, there is a big change, and it's this. As of now, October 3rd, 2025, the enhancements to those credits that we've had for the last 5 years are scheduled to go away. And let me break this down in terms of eras of the premium tax credit. The premium tax credit has been around since 2014. And to my mind, we've had 3 eras of the premium tax credit. First era, 2024 through 2020. In that era, we had a premium tax credit table. This table's in the Internal Revenue Code, and it basically says, based on a percentage of your income, you're expected to pay so much of that as your medical insurance premiums. It's measured against the second lowest cost of Silver plan. And what the table says is, if your income exceeds 400% of the federal poverty level, you get 0 premium tax credit. So that's really interesting. They call that the subsidy cliff or the premium tax credit cliff, the 400% of federal poverty level cliff, sort of dreaded in self-employed individuals' financial planning, early retirees' financial planning. But I will say this, the years 2014 through 2020 saw millions of Americans successfully get substantial premium tax credits when they were on an ACA plan and they were self-employed or early retired. So it's absolutely possible in a world with the 400% of federal poverty level cliff to get a premium tax credit and to still be financially successful. Okay, so that's the first era. And then what they did starting in 2021 and effective through 2025 was they enhanced the premium tax credit. They did 2 things. First, they increased the amount of the credit. So for various levels of income, you got more of a credit. So that was a good thing for the self-employed and the early retiree. And the second big one was they got rid of that 400% of federal poverty level cliff. Now, yes, as your income increases, your premium tax credit slowly declines. But it's still, you still get it even if your income is 450% of federal poverty level or 475% of federal poverty level or what have you. So the second era from 2021 through 2025 has been better for the early retiree and the self-employed people on ACA medical insurance plans. Well, what's going to happen in 2026? What is scheduled to happen now as of this taping, October 3rd, 2025, all subject to change, is we're just going to go back to the first era where the table will be the table that applied in the first era and that 400% of federal poverty level cliff comes back. Obviously not good news if you're self-employed or early retired and on one of these ACA medical insurance plans. But there are some developments that have occurred and that we have to look to that could change this a little bit and certainly can change our planning regardless of what happens. The first development that I'm going to talk about in this video is the government shutdown. So the government shutdown, it's the so-called government shutdown. That's a whole other conversation. But what is commonly referred to as the government shutdown has this sort of interesting dynamic where it's sort of a forcing issue. The odds are there's going to be some resolution to the government shutdown in the next few months. I think it's going to be at least 2 weeks away or at least a week or so away, but it could be months away. But it's a forcing issue. It means some sort of legislation is going to pass. And one of the issues, there's a lot of issues going on with this government shutdown thing, but one of those issues is, do they extend the enhancements to the premium tax credit? And it's absolutely a potential leverage point and negotiation point as the government shutdown thing is resolved or not resolved. So that's sort of interesting, and that is an opportunity. And I think that increases the odds that some version of the enhancements to the premium tax credit will in fact be passed for next year. No guarantees on that, none at all, by the way. But I think that we have this sort of inflection point of the government shutdown. It provides a vehicle for both sides to come to a conclusion. Hey, maybe we're going to give early retirees and the self-employed higher premium tax credits. That is a real possibility. And then the second thing that's out there is what I've referred to as bronze is gold planning. So this dates back to July, where they passed the One Big Beautiful Bill. The One Big Beautiful Bill did nothing about the premium tax credit by itself, absolutely nothing. But what it did is it gave us a planning opportunity to increase premium tax credits regardless of which version of the table or a compromise version is ultimately enacted. Here's how. One Big Beautiful Bill says, starting in 2026, all bronze plans will qualify as so-called high-deductible health plans. That's a fancy way of saying if you sign up for a bronze plan, you get to max out an HSA in 2026 and going forward, as long as that's your own, the bronze is your only medical insurance plan. That's a great opportunity because that does several things. First of all, it gives us a tax deduction. That tax deduction lowers our adjusted gross income, potentially increasing our premium tax credit or potentially getting us below the 400% of federal poverty level cliff if that cliff applies next year. Right? So either way, regardless of the ultimate resolution on the government shutdown thing, this bronze is gold planning where we sign up for a bronze plan. We have a lower premium anyway, which reduces the pressure on this issue from a financial planning perspective. And we open ourselves up with this optionality of being able to make that deductible HSA contribution, which then allows us to have a higher premium tax credit and or to slip under the 400% of federal poverty level cliff. That's a pretty good idea. And oh, by the way, the HSA provides a tax-free pot of money to pay for our actual medical expenses. So it might be, okay, I'm going to sign up for a bronze plan, and now I get the weekend warrior injury or whatever it might be, and now I got some medical expenses. Well, do I want to dip into a traditional IRA to pay for that? Well, that'll lower your premium tax credit in most cases. Or do I want to sell a capital gain asset? No, because that could trigger some capital gains, up income, lower premium tax credit. What I can do instead is whip out the HSA debit card. Hey, just, doc, take this money out of my HSA for this qualified medical expense, and I haven't created taxable income to fund my medical expense as a self-employed person or as a early retiree. So this is very much stay tuned. The issue on the table are these enhanced premium tax credits, the 400% of federal poverty level cliff, on the premium tax credit. And I do think the government shutdown increases the chance that in 2026, we're not going to have the 400% of federal poverty level cliff, and we're going to keep on having these enhanced ACA premium tax credits, or at least a version of them. But it's not guaranteed, far from it. At best, it's a 50-50. Stay tuned. And regardless of the ultimate outcome on the government shutdown, I like for so many Americans who are early retired or self-employed, bronze is gold. Sign up for a bronze plan. Look, you got to do you. I'm not giving you advice in this video, but boy, that's looking more and more attractive as this becomes an issue. Let me know what you think about premium tax credits, about bronze is gold planning. Let me know what you think in the comments below. Thanks so much for watching. If you enjoyed this video, please mash that like button and subscribe to my channel. I will see you next time.